The portfolio update you have all been waiting for. This is my Trading 212 portfolio update for November of 2022. So we've had an incredibly volatile time in the markets. Again, we are knee deep into a recession, into a bear market, whatever you want to call it. We have a new UK Prime Minister. The fiscal policies are all over the gaff. The interest rates are climbing faster than I could ever Kilimanjaro, and nobody knows what on earth is going on for the stock market. However, we've had a good few performances over the past week, and let's get straight into the portfolio. So the value of my portfolio today is £368.61. I'm filming this on November the 5th on a Saturday, so the stock market shouldn't bounce around. So since last month, we are up a few pounds, and this is because of deposits rather than the stock market shooting up. However, we are in the green finally on overall return, and this is a lot to do with the pie that I have invested in, and I'm very happy to have invested, and I'm excited to show you. So overall, we are up by 1.8%, and that is a net return of £6.56. That is very good for this current climate because, and like I said, we're going through a whirlwind. Interest rates are so high, it doesn't seem like anyone knows what on earth is going on in the stock market. But let's go through my investment and see the changes since last month and any new additions. So Vodafone is down by 3%, which is down by 32p, and I have 7.3 shares in that. I didn't buy any more of that. Vodafone has been doing all sorts of stuff for the past month. It was a bit boring for me and I didn't want to invest. So the Vanguard FTSE Japan, one of my favorite ETFs, is up by 1%, and that's a 34 pence yield. The FTSE All World High Dividend Yield is up by a good 2%. FTSE 100, since I bought it, maybe I bought it too high, and that's down by minus 0.29%, giving me a net return of negative 19 pence. I did sell some of my shares that I had in the S&P 500 and I transferred that into the pie, which we're going to get into later. Unilever is up by 5% and I only have 0.02 shares in that. Unilever is one of those companies that is recession proof, or people like to call it recession proof. No matter what the conditions are, people are always going to need household products. The name brand foods, people want to let go of those, the last thing. So Unilever is always going to create things that people need. Therefore, it's not doing too bad in the current climate. So the SPDR UK Dividend Aristocrats, that's down by a big 7%. That is because overall the UK economy is not doing well. So of course, down by 7% is not too surprising. Rolls-Royce has had a good run, or a good drive, should I say, and they are up by 15%. So as you can see, the past month, they are soaring up. And that might be a lot to do with their valuations when they were around 69p, which probably meant that it was undervalued, and investors have kind of put their money in and corrected this, so it's at a more valued price of around 85 pence. So in hindsight, buying more Rolls-Royce would have paid off, but that is never a regret of mine because betting on individual stocks is a way to lose a lot of money. National Grid is down by 4%, not too surprising. So Royal Mail is down by 5% and I didn't buy any more shares of that. H&M, I have 1.05 shares, and that's thanks to a very nice, probably a viewer, someone signed up and I got a free share, and I got more than one share. I got 1.05 shares of H&M and that is down by 1.78%. GlaxoSmithKline is up by a whopping £9, so that is a 37p yield. Looks like GSK, a pharmaceutical company, is doing really well. Let's actually see their performance over the past month. Yep, they're going up like a staircase. EasyJet is up by 1%, which is quite surprising to me because who on earth is actually flying that much right now? But if you looked at the previous history, it's not too surprising because it was probably a very undervalued stock. However, that being said, EasyJet is a European flight company, and during winter they don't get as many short haul flights because they get that mostly on summer holidays. So who knows where the stock price of EasyJet will go. Direct Line Insurance is up by 1.2%, which is pretty good, and I don't know why, but their performance over the past month, yeah, seems quite good. It looks like it's on an upward trend. So Deca DAX Plus Maximum Dividend, I think, is up by 3%, and that's a 3p loss. Carnival, which was a free share, up by 0.29%, can't complain. So the next three are all US based tech companies, and if you've heard the news, tech companies, especially those tech companies who rely a lot on advertising, have really felt the brunt force of the recession or the early onset of a real recession. So Amazon is down by a massive 29%. And if you can see, it is back to pre-pandemic levels valuations, which is just crazy. That is in part driven by the fact that they missed their projected revenue numbers, but also tech stocks are usually one of the first to actually fall down during a real recession. And of course, Amazon right now is going to feel the brunt of people buying less things because the high inflation has eaten into the real wages and people can buy less items with the same amount of money. So there's no way around that. Amazon is going to lose out a lot in sales because people just aren't going to buy stuff. Alibaba is down by a big 23%, but that was free falling all of this year anyway, so I'm not too surprised. And lastly, as an individual stock, I have AMD, which has been doing crazy things over the past month actually. So it dropped a lot last month and it's actually gone up despite the fact that they missed their revenue numbers by a huge amount. AMD has still gone up. That could be in part due to the fact that they're actually gaining a lot of market share in like the server front. So the server chips are becoming more and more AMD instead of Intel, and also going forward they have a better roadmap than Intel. So that is why there has been a slight upwards trend on AMD. So those were my individual stocks, not really contributing a lot to my overall win of the portfolio. And as you can see, some of these stocks are down by quite a lot. My Trading 212 account only has around £300 in, so it's not representative of my entire investment portfolio. However, it probably is more representative of the average beginner investor. If you are a beginner investor, I wouldn't recommend actually at all investing in individual stocks. So probably look into things like an ETF such as the FTSE 100 for the UK, FTSE Japan, the German stock market, which is actually not on Trading 212, and then there's of course the US stock market such as the S&P 500. Definitely try not to invest in individual stocks because you'll see massive volatility like Amazon down by 30% in a matter of days. But anyway, let's go into my pies, and I'm very excited to show you this pie. So this is a copy of the Almost Daily Dividends portfolio, and I initially invested £50 as kind of joke to see if you actually get dividends, and surprisingly I did receive dividends after putting in only £50. And the reason why I say surprisingly is because the recommended amount is £400 and I still haven't reached the £400, which goes to show even if you don't have £400 you can still invest in this decent pie. And currently it is up by a massive 3%, which is a result of £6.58. So I've invested £200 and 92 pence. That 92 pence is a bit weird because I've actually transferred it from my main account into here. Don't ask me why. So I've actually received 18 separate dividends, all of the value of 1 pence. I'm guessing I would have received a bit more dividends, but because it was less than 1p, they can't physically give me anything less than 1p, so then it was just rounded down and the money is probably lost, which is probably also why the minimum recommended amount is £400. Even as a dividend pie, I'm still impressed by the result that it's gained in this economic hurricane of a climate. So let's actually go through the individual holdings. So as you can see, there are 50 companies. I'm not going to go through all of them, but companies like Apple down by 7%. There are some big winners on this portfolio. Big companies such as Johnson & Johnson, which are dividend kings or dividend aristocrats somewhere around the line. 3M is doing really well. Canadian Natural Resources is doing really well, which is up by 7%. Pepsi is doing well. AT&T is doing really well, which is another tech company, but they are more into infrastructure, so that's probably why they're doing well. McDonald's is up by a massive 7%. JP Morgan Chase 12%. Caterpillar 20%, IBM surprisingly 6%, Cardinal Health nearly 10%, even the Bank of Nova Scotia is only down by 0.5%, Laos is down by 5%, which of course out of 50, one or two or few will be down, is fine. That is also a reason why pies are better than individual stocks, because they allow for a certain amount of diversification. So even if 3 of these companies failed, you still have another 47 to pull your money back up. So Illinois Toolworks is up by 9%, Starbucks up by 6%, Chevron 9%, Aflac, or however you say it, is up by a massive 10%, Franklin Resources is in the green, and W.W. Granger is up by a big 9%. So I leave a link in the description where you can actually sign up and use this pie. It is a copy of an existing pie, however I'll just make it easier for you to use the link, and because it's in a pie you can actually reinvest your dividends automatically. However, that being said, the minimum amount to actually invest into this pie is £50, so you're going to have to get £50 worth of dividends, which could take, at this price point over a decade. So just bear that in mind. So as you can see, the total dividends gained is 18p and 12 pence of that is reinvested. And the only reason why it reinvested 12p is because I actually put £49.48 into this portfolio, and then that 12p added to reinvest it into the portfolio. I've also discovered an option where you can set a goal, and my goal currently is 1,000. It's just a random number. I put in million before and it seems stupid, but let's go back to a million. So if you want to achieve a goal or something, it makes it really easy to, you know, put in your own goal. Wow, yeah, I've reached my goal of £1. Hooray me. If you use the link in the description down below, you can sign up and receive a free share, and I will do too. I think there's only 2 days left on that, but even if I don't receive a free share and it expires, you should still receive the free share. Make sure to check out some of my other videos, and I will see you in the next video.